That's the up here. All right, our stops on the other side of the 3-minute bar. We got orders placed lower if it carries in the direction of the open. If we get stopped, it's an automatic stop and reverse. Okay, so that's a stop and reverse, and it will place orders to the upside should that occur. Again, crude oil has been pretty choppy over the past month during the opening. So hopefully we'll have some lovin' today. As you can see also, again, on the other chart here, you can see the opening is right within a balanced area. And that's been kind of the problem on the openings this past month, at least for crude, is our openings have been within a balanced zone, again, which makes for a little bit of a struggle. All right, we'll see if this gets stopped and reversed. Again, a lot of times our stops in reverse, if it doesn't go well in one direction, it kind of snaps back in the other. We'll see how that plays out.
Order submitted.
Oh yeah, because it was the middle. Okay. Good morning, Larry. So we have a little bit of a balanced area here on our opening. Crude oil. We're short 2 here at 46. So just to see what these folks want to
the Irish
do.
PM Varadkar are currently on the wires, welcoming Prime Minister Johnson's words today.
Again, if you want, you can track the history of our open range trades on the website under the performance tab. And then you drill into the Google spreadsheets. We've been doing crude oil openings since May, and we've done fairly well with it. Same with the NQ. All right, we'll have a formal briefing on the other two in a few minutes. And of course, our slot here, our presentation slot is going to be at 11 a.m. this morning. All right, so it'll be a short Uh, it'll be just a short PowerPoint introduction, and then really we're just going to see if we can put on some good trades here throughout the morning, our period, and I'll explain what we do, what we look for, kind of the general overview of our method during that period to give you guys a little bit more of a flavor of what we do. Yeah, yeah.
There's comments here from EU's Maelstrom saying they're not optimistic for salvaging W2 appellated body.
All right, we're back to our entry here. Did not get stopped. All right, let's see if we can get a little push to
More comments
the
from
south
UK
side
ministers saying a
of
decision on how
Chicago.
Huawei and 5G is due up in autumn. Maelstrom saying the WTO will be unveiling the figure for Airbus tariffs this week.
Yeah, quick snapback. All right. We are in Mr. Market's hands. Okay, so good morning, everyone. All right, we'll just start our opening briefing. Again, we're short of on crude oil here. We're short of crude oil at 54.46. All right, up on the screen there to the right. Stop is at the upper portion of the 3-minute candle, and we have staged orders to the downside should the market cooperate with us. All right, so we got that working for us right now. It is in a bit of a balance zone here. If you take a look at the profile, all right, again, we're right in the context of value, but there is some hints of some weakness. So hopefully we'll succeed on that. And Mr. Market, Mr. Crude Oil would cooperate with us. All right, we'll play that out. Um, so today not only starts a obviously new month. All right, it is a new cycle based upon the Taylor 3-day cycle. All right, we're on a cycle day one. Yesterday, prices did fulfill some upside objectives within the context of the cycle. So, as a cycle day one, the typical norm for a cycle day one is we would be looking for some type of a decline. But the market closed strong yesterday, so very shallow, if any, bit of a decline in the overnight. That doesn't mean we won't have a decline today, but we did not have one yet in the overnight period as the market closed fairly strong yesterday in
It's more
its
from
range.
EU's Maelstrom. EU retaliation over Airbus will
So
be
the
in line with
idea of a
WTO rulings.
3-day cycle, all right, is to establish a low point from which to rally, and it kind of, there are other cycles. Some people use like a 5 or a 4.5 day cycle. Some people use a weekly 7-day cycle, 10-day cycles. We use a 3, uh, and that pretty much marks pretty good rotation in the markets for us. Um, and we have 10 years of historical data in terms of ranges. So what you'll see on the screen here is you'll see these areas where we get where it says PTG TTT, which means tailored trading technique. All right, target zones there to the upside. All right, we got the possible low target down here, and then if we have some extensions to the south side, we have some lower targets listed there. These are all targets based upon a specific cycle day. So cycle day one compared to cycle day one. So they'd be like comparing a Monday to a Monday. All right. So it's not sequential. And this data and these ranges go
It's more
back
from
10
Maelstrom that
years.
my impression is that
Okay.
the US
So
will hit the EU
pretty
with
significant
Airbus
in terms
levies.
of the historical ranges. It is dynamic, which means it automatically adjusts for volatility, right? And it makes the necessary adjustments accordingly. So right now, these ranges up here. So again, right now, the way I wrote, by the way, the daily trade strategy, all right, is available for everyone. If you scroll up a little bit, let me actually put this back out there. Let's see. Daily trade strategy is available for everyone, and the password this month is Rocktober. Okay, there's the link to the daily trade strategy. So that gives us an initial outline of what we're looking for, levels to the upside, levels to the downside. In other words, two scenarios, bullish, bearish, with a line in sand type of level, which today basically is going to be the previous close. Other days it won't be the previous close. So don't make an assumption that it's always the previous close. Today it will be the previous close. So as long as price holds above the
Just a bit
previous
of
close,
geopolitical news here, and again,
we have
exclusive
potential to
from
come
the
up. The
Middle
initial
East Eye,
upside
revealing that
potential
Saudi Arabia has given a green light to the
up here,
Iraqi
it's
PM to arrange a
29.95
meeting
is up
with
to the
Iran as a first
3,000
step
area.
towards de-escalating
That's the
tensions in the
initial
region.
upside. And should the market rotate down and violate and stay below the prior low, okay, we have some downside targets here as well. So again, those are laid out in the daily trade strategy. Okay, for both ES and NQ.
More from
Okay, I
Maelstrom,
do
the
not
US
write
seems
one for
willing
the
to
crude
talk but
oil.
first impose tariffs.
I may consider that in the future, but right now, again, takes me quite a bit of time to do the daily trade strategy in the morning for the other two. So we'll see how that happens over the next few months. But anyways, so again, same thing, previous close on the NQ. If it holds above the previous close, again, there's upside targets you can read on
In
the
10
daily
minutes
trade
time now from
strategy.
the
Again,
bottom
if
of
it
the hour, waiting
violates,
to hear from the
again,
Fed
downside
Governor
as
Bowman
well.
addressing the St.
So
Louis
the
Fed's
core
annual
idea of
community
that
banking
is we have
conference.
at least an idea of what we're looking for the market,
It's
how the
more from
market to
EU
react,
scenario now. It
to
seems that the EU will
respond,
face US tariffs within
right,
weeks.
to
Additionally, at the bottom of the hour, getting
in
the
terms
Canadian
of
market
key
manufacturing
reference
PMI for
levels,
September,
right?
power
So
rating of
previous
49.1.
close obviously is a key reference point. We call them decision points. And so long as it stays above that, our lean, okay, our lean will be to the upside. All right, that's not a guarantee. It's not a prediction. It's just a lean. Then we look to see how the market is acting on the lower intraday time periods, 5 minutes into our execution charts. Volume, again, a lot of, order flow, volume, all that stuff goes into the mix. But we have a line in sand reference point. So as long as it holds above or below a key point, then we're expecting the market to behave. The expectation is the market to behave in a certain way. Right? And if the market does not behave in an expected manner, then we look at it from the standpoint of something maybe changing. All right, and we try to uncover what that change may be, look for clues. The advanced decline ratio, ticks, okay, of course, VIX, all right, the intraday VIX readings, all that go into the mix. Real-time order flow, again, all part of trying to uncover the clues to what the next market move may be. We are looking for directional moves. I don't want to be stuck in the middle of rush hour traffic, which is kind of in the congestion area right around the middle. Don't like trading that. Waiting for some sort of a move outside of the value zone. As you can see here on crude oil, case in point here this morning, and this is kind of how it's been pretty much all month. All right. As you can see, this balanced area here, the market's just kind of oscillating back between that. That's kind of like the worst type scenario for an opening strategy. Is again, it's stuck in range. So we need to get a break. We may get a stop and reverse here, but that's kind of the worst case scenario, and we've actually experienced that this month. Past few months, since May, actually, we've had monster breakouts of the opening, and we've had extensions. Again, this past month has been a struggle, and it's exactly what we're seeing is this balance area during the opening sequence has really struggled. So, anyways, we'll play it out. Stop and reverse comes at around 73s. And exactly what we get. All right, so stopped at 72, stopped in at 72, 73s. $54.73. All right, so now how this works is we're long now at 73. We got stopped out at 72. Okay, stopped in at 73 on the long. Again, now we have the upside targets placed. I'm going to disable the auto X. Stop goes to the opposite side of the range, and we let that play out. If it doesn't want to go to the down, see if it goes to the up. Okay, so that's 54.72, 473. And again, the worst case scenario is what we call a double stop, which the market, even on the reversal, does not break and extend. All right, it comes back into the range, and we get stopped again within the context of the range on the opposite side. That's what we call a double stop, and that is that's purgatory for us. uh, it's not fun, but that's purgatory. That's kind of the worst case scenario. Typically, the opening range does not do that over historically speaking, from our data mining, but will be periods where it will, and you just don't know what those periods are. I mean, you can make some inference that because of you know, the the range is balanced in the overnight. Again, the profile action is balanced. We may not get a extension, but in essence, we never know. Even on balance zones, we've seen it, expand. So we take the good with the bad, as they say.
The EU Trade Minister
And
Malmström
that's
says
on
we're
any
looking at
mechanical
all
system
options
or
for
any
a
strategy.
response
It
to
doesn't,
tariffs.
regardless of what it is.
We are just under 3 minutes away from the bottom of the hour when we get data from Canada, the RBC manufacturing PMI print for September, a prior read of
Could be that the
49.1.
character of
We're also
crude oil
expecting
is
comments
changing
from the Fed's Bowman, a permanent voter at the
for a
FOMC.
period.
The speech is a keynote speech,
And
but it's on research
again, we'd
into
have to make an
community
assessment of
banking.
whether or not we want to continue with that or not. But we don't do it after one or two losses. It has to be a fair amount of data to give us, to lead us into making a change. Again, tomorrow we could get a breakout. It could extend, hugely. So, all right, we'll see what happens. Orders in place, stops in place, risk is managed. On the 3-day cycle, our holidays and Christmas are like, um, it automatically adjusts. It automatically adjusts for the holidays and so forth. If the market is trading, so sometimes around those periods you'll have a half day, and so even if the market is actually trading, the cycle is still alive. On actual holidays, Christmas, New Year's, since there's no trade, okay, it just moves to the next trade session. Okay, just moves to the next trade session. All right, we're going to come up on our opening on the NQ here. We'll flip over to the NQ chart. Maybe Mr. NQ will do better for us today. A slight gap opening. All right,
51
and we're
for
off
Canadian
on
PMI,
the
51 in September, up from 49.1
equity
prior.
indexes.
Comments from the Fed's Bowman.
So again,
She does not discuss the
same
outlook
strategy
for
applies
interest rates
here.
or
3
the
minutes.
economy.
There are some alternate time period for openings. We know of some folks that use a very like a 1 minute opening. We use a 3. And again, it's somewhat fairly balanced here if you take a quick look. All right, again, as long as it stays above that previous close, all right, we have some upside drift potential. I'll show the opening for the end of the S&P here as well. Okay, so on the left side is the opening for the S&P. All right, far right is the crude oil. Again, we're long here at 72s. Again, first target around the 93s. Actually, I'm sorry, we're long 73s. That was our stop and reverse price. So 93s for 20 ticks. If we get it, that'll be our first scale. Han, right here in this room, okay? Here's the link. Oh, okay. I don't know about the Wyckoff Trader one, which room that's in. All right, 13 seconds left, 10 seconds, again, for our NQ.
Order submitted.
Han, I just posted the daily trade strategy in the PTG room, if that's what you're asking about that. All right, NQ along here, 1650 triggered. S&P has not triggered yet. All right, so
we are 10 minutes away from the release of the US market manufacturing PMI. This is the final read for September, expected at 51, unrevised from the preliminary read. Also expecting results of the Bank of England reverse gilt auction in the 15 plus year maturity range. Prior offer to cover ratio as a guide to spot 5-1.
all right, I'm getting some upside movement in NQ here. All right, stops move to even. All right, we're risk free on NQ. All right, targeting 35.75. Steve, if you're trying to get in doing something on the website here, again, I'll have to take care of that shortly. Steve, if you could just type in what your email address is there. Okay. All right, I've reset it. I've unblocked you.
Order canceled. Order submitted.
Guys, if you're hearing stuff in the background on Ninja Trader, all right, just as an FYI, I'm running some beta strategies, so you'll hear a bunch of stuff going on that's not live action. If you hear that ninja stuff in the background. All right, again, 35.75. Let's see where that takes us on the bigger picture. Possible high, cycle high, 35.70. All right, so 35.75 would be matching up with the cycle day one high. Looks like we're going to get it, possibly. If we can get a strong enough push.
3 minutes till US manufacturing PMI final reading for September, expected at 51, unrevised from the preliminary read of 51.
Han, if you try an F5, that's to refresh your screen. See if that helps. If that doesn't help, Marlon can help you. Try that. All right, S&P did trigger to the upside as well. All right, again, I'm not in S&P on the opening since I'm in NQ, but again, that triggered to the long. Around 91s.
In geopolitical news, Turkish President Erdogan says we may suddenly arrive one night in northeast Syria. One minute till US manufacturing PMI.
Order filled.
All right, filled on the NQ. Yay. All right. $78, $35, $75. All right, so target filled on the NQ. And I will take a snapshot of that since it's complete.
10 seconds.
Order canceled.
51.1 for US manufacturing PMI, 51.1, a modest upward revision from the preliminary read of 51.
All right, so 77 ticks on the NQ. All right, so there's the NQ snapshot. It is posted to the website. So you can take a look how we post that. All right, still long of crude. Let's giddy up Mr. Crude Oil for us. There was only one contract on that NQ. Okay, he has a fairly wide opening range there, and again, our risk parameter for the strategy, for the model strategy, is $750 maximum risk. Okay, maximum risk. So it automatically position sizes accordingly. So had it been a narrower range, we would have, luckily get two contracts, but we had one contract, and that keeps us within our risk parameter. Typically, we like to have two contracts or more so we can scale. But again, the most important thing is to keep risk uniform. Okay, Han, did you pass? Han, if you scroll up, you should be able to see links for the daily trade strategy. I'll repost it if people need it. You are? Okay, yeah, just scroll up a little bit, you'll see it, can't miss it.
2.13 at
Password is
15-year gilt
Rocktober.
buyback. Buys back 1.27 billion
That's for
pounds
the,
worth of 15-year plus gilts.
when you go to the website, you can just,
Office
by the
code
way,
2.13,
just
that's
click on
down
that
from
link and
prior
you should go right to the,
2.51.
it. All right, S&P, if anybody took the opening on S&P at around 91s, your first target up here is at 93 quarter, 93.50. Okay, so that's a successful, it just crossed that threshold there, so that's a winner there. And again, we have a winner on the NQ. Still lugging the crude oil though. That's heavy luggage. All right, what I'm going to do, everybody has a snapshot of the opening. What I'm going to do is go over to our normal charts here. Okay, which is we use Renko's.
We are just under 10 minutes away from the
You
top
can
of
use
the
a
hour and the release
500
of the
tick as
United States
well
ISM
on
manufacturing
NQ.
for
That works
September.
fairly well.
Low estimate of 48,
500
spot
tick.
5, high estimate of 52. Median estimate is 450. That's against a prior 49, spot 1. We'll then jump to construction spending, also due at the top of the hour. Month on month for August expected at spot 5%. That's against a price spot 1%. Into the components for ISM, prices paid expected at 48 spot 5. That's against a prior 46. Employment prior read of 47 spot 4 and new orders prior read of 47 spot 2. A note here from TD Securities ahead of today's ISM data. They're looking for a rebound to 50 spot 8. They expect easing trade tensions to have marginally boosted business sentiment in September.
I'm gonna be recording
They
it.
do say although
Trend
the regional
Wizzo.
surveys continue to give mixed signals, the average of the ISM adjusted versions are pointing to some improvements since August. In addition, a recent spate of stable capex orders, improving China PMIs and a firmer market manufacturing index also boost the odds for a positive surprise in their view.
Yeah, I'll make it available tomorrow after we're done. I'll render it out later today, this evening. All right. Just so everybody knows, again, ahead of my presentation at 11, everything's going to be very informal. Okay, I'm just going to do a very short intro PowerPoint just to introduce for the recording and everything, and the disclaimers, and pretty much I'll just explain kind of what we're looking for. We'll walk through the steps, and then hopefully we'll have a trade or two during that period. But again, everything that you see is what we're doing right now is essentially what we'll be doing during the presentation period. But I decided we'll do a little bit more of an informal presentation this segment. Oh, and by the way, if anybody has any questions for me directly, okay, please preface the questions.
The French Stability Council,
that you're
that
you're going to send me.
has flagged up risk to the French housing
Okay,
market.
because again, a lot of questions will go by. I don't know who's being
the risks associated with
asked
the
the
French housing
question.
market.
So if you have a specific question for me, please direct it to me first so I can see where should I be answering a question or if that's directed to someone else. That will make it a little bit more efficient.